Hello everyone and welcome to my YouTube channel. This is another video which is going to be very important and it's going to be very knowledgeable. Please make sure that you watch from the beginning till the end. You might have already seen the thumbnail. It's about how the markets are going to look in the next 2 to 3 years, and I'm going to give my overview how the markets are going to move in the next 3 years or so, and what you can be doing about it. However, let me just start with the disclaimers. Whatever I tell you or show you in the video is just for knowledge purposes. It's not a push from my side to come to the market and do your investment or anything as such. So initially, now why did I make this video? The intention was really simple. On the Monday, the market was really bearish, and on Tuesday, the market was really bullish. It just went up like 2.5%. So it was just to make sure and clear to people that see, market is going really difficult place in the next 2 to 3 years. So if you understand from a worldly point of view how the markets are going to work, or from the macroeconomic point of view how the markets are going to work, you are going to be a little bit benefited, and it's going to make sense why the markets are moving like this. A bit of reasoning why the markets are moving like this. So to understand that, we have to understand where we are at this point of time in the markets, or the world is where the world is right now in point of stock market point of view. So we have to just understand that from the past 1 year, the market or the base Nifty index has literally given no returns. It has been literally zero. And why has that happened? There have been a lot of issues. There have been supply chain issues, and there have been, say, Russia-Ukraine crisis, war issues, and there have been, the Feds have been increasing the interest rates every quarter, and there have been inflation data coming from US and also from India. The inflation rate has been increasing, and there have been the issue of, say, Taiwan and China having a bit of heated war kind of a situation over there. So everywhere in the world there is a lot of focus going on, and it's a very tense situation as of now in the world. So market have actually reacted to that, and market has just been very volatile because of that. But at the end of the day, we have not really made any return in our portfolios. This is where we are standing as of now in the world. So now, to understand about the next another 2 to 3 years how the markets are going to move, we'll have to go back a bit into the history, how the markets have really reacted after the COVID situation or the COVID crisis. What really happened to the market? We'll need to understand that. So after the COVID crisis, what really happened? The market literally crashed for like 35 odd percent. And after that, what happened was really magical. There was a hell lot of panic all over the world. The world was literally not producing anything. And the whole of the world was almost closed for, say, at least for 6 months or so in a year. But then you can see in the stock market that if you go to the Nifty 50 index, the Indian index, you can see after the fall of 35%, just not even a year, it has made a move from, say, 8,000 to almost 18,000. Now my question is, you are already saying that the world was almost shut down for 6 months or so, and there was no real production. But then how did the markets move really so fast and so high? If you properly see over here, feels like somewhat the markets were on steroids. From 12,000 odd, it has gone to, say, 8,000 in two months odd, 2 3 months odd, and then it has given a run up of almost, say, around 100% odd in the coming days. And why did this really happen? Though there was no any production or any such supply happening going on, there was no productivity in the nation. After the COVID, what really happened was the world was really shut down, and our nation was really worried if there is going to be, there was a lot of panic all over the world, and they were really cared about our nation not growing for the next at least 2 years or so. Our government, what they did was they just printed money and just bought it into the economy. Our government has something like an invisible power. They can literally print how much our money they want, and they can put it into the economy. Now what happens if you put a lot of money into the economy? There are going to be a lot more new businesses. People are going to get easy access to credit and easy access to loans. They are going to buy new stuffs, and they are going to buy, take loans on a hell lot of things, and economy is going to just pump up. Was it, there was real such production? The answer is a no. So the money that we had in the economy was just the debt we just took. So how can the government literally print so much money into the economy? Isn't there any standard or anything as such? It's a completely different topic. I can be making a different video on this. So as of now, we are living in a monetary policy where we use fiat money, that is literally your notes. So before that, we had other gold standards. This will explain you lots about the history of why we have come into fiat money. If you see here, literally after the COVID situation, in the maximum chart of the Nifty 50 index, you will see that there has been a sharp spike after the fall in the markets, and this will somewhat look like a V shape. But after the market falling in 2008, you can really see that the market has taken a lot of time to recover. Now you can literally see that market from its peak in 2008, it literally almost took around 7 years to recover from and come back to the same prices. Now why was it? The answer is really simple. In 2008, there was no fake money that was printed into the market or printed into our economy. But after the COVID crisis, they really took printing money into the whole new next level. So this is what they actually did. So, anyways, if you see over here, after the peak in 2015, there was a downfall of say at least 20%. And if you see the rising back of it again, you will find a pattern. You will see somewhat there is a letter of W, and this is called W recovery. And the recovery that we saw after COVID is called as V-shaped recovery, and it's really quick. So what I want to tell you is markets are really controlled, or our economy is partially controlled by government. They can literally do, say tomorrow the market can go 20, 30 odd percent down. But then the government has a lot of power. What they can be doing is they can be again putting a lot of money into our economy, and they can pump the economy. They can say create that artificial demand in the economy, and our markets are again going to go crazy, like just how it went after the COVID times. So what I'm just trying to prove is that our government has a lot of control on our economy, and it is in their hand what they can be doing and what they want to be doing with our economy. So what I want to tell you here is the V-shaped recovery that has happened has not really been healthy for our markets. That's the reason why we have seen almost 1 year of no growth in the markets, because the market just went crazy. There was just the artificial demand that was literally created from the money that was printed into the economy, and the market just went crazy after it, because that was just artificial. The demand that we created was just artificial. Though you understand that COVID was a situation that we had never seen before in the whole history, the market literally didn't even take at least a year to recover. It just went up like anything in just 6 odd months. So that is really crazy, and that is how the growth we saw in just say 1.5 year was almost about 100%. That is really incredible. So now, before Rakesh Jhunjhunwala sir dying, this is what he actually had to tell about the Indian markets.
I think markets will go up, but at a slower pace. Regardless of global developments, I think Indian markets will gain, but they will gain at a slower pace.
So I, for the next 2 to 3 years, expect a really volatile market. The markets are just going to find reasons to go up and find reasons to go down. Just saying that there is no more bull run. I'm not telling that there is not going to be no more bull run, but in a time space of say another 10 years, the bull run is still intact. But what I'm going to say is we are not going to see the crazy amount of returns for the COVID situation. If the government still tries to pump up a lot of money into the economy, I'm just telling that it might seem really good for the next 2 to 3 years, but in the later stages of this decade, I really think it's just going to have a really negative impact on us, and it's really going to be bad for us. So it's going to be sensible for the government to just keep doing what they are doing. The feds are just increasing the interest rate. That is really sensible what they are doing. But if they just decide, you know what, enough of all this, we are just going to put some more credit into the system, it's going to be a really disastrous stroke to do that. As of now, is what I think. What I'm telling is the markets are going to gain. There's no question about it. The markets are going to improve. It's just that it's going to be very volatile, and you are not going to understand when the market is going to a real correction and when the market is going to gain a lot. You are not going to realize where the markets are gaining. So it's better to do your SIPs regularly instead of putting in a lot of bulk money. I tell take small positions every month, and just downward average. If the markets are going down, just downward average it every month, and make your positions according to it. Just don't dump your money at a single price, and it's going to be really stressful, and you're going to lose on a lot of confidence on yourself and the market if you're doing that. And if you see the market going like 20 odd percent or 30% or down from here, so just do your SIPs. That is best way to invest right now. Is, as I told, the W shape that was we saw is somewhat really, I think, is going to prevail in the market. That's really what I think is going to happen in the market, and that is what is really healthy for us. I can be extremely wrong. The government, as I told, they can do whatever they want. But what I'm telling is, this is what is going to be healthy for us. The slow growth is what we really need right now. And over a span of time, the slow growth is going to benefit all of us. But there has been a lot of ruckus in the US markets. A lot of big investors, like, say, I'm going to put it on your screen. They have been telling, you know what, this is the end of the world. There is going to be 80% crash, and a lot of people are going to lose everything. Here are the articles that I'll be putting, and here is what they have been saying. Is something like that really going to happen? I really don't think so. Why do you think so? That there is not going to be a 80% decline in the market? I don't say. I see at least a 40% correction from here, but say 80%, is that really possible? What I'm trying to say is, our economy is really controlled by a government. Now, if there is going to be an economic crash or whatever like that, it's going to really criticize government. So how is it affecting it? The party that is ruling right now, there is going to be a lot of mud put over them. There is going to be a lot of negative response towards it. What will the opposition party say? You are the people who just crashed the economy. So is that something that the ruling party really want? The answer is really no. At least from India's point of view, I really don't think there is a 80% fall or something like that coming on our way. Even though there might be something like, say, 30-40 odd percent, and that will be also really gradual, and that will be also really slow, and it's not going to be a really quick fall. And why am I really just bringing into context of the US economy? Because let's really understand, our country is really dependent or interdependent on how the US economy really works. So this is the reason I'm just comparing or bringing the US economy into the point of view here. Literally, Michael Burry has sold all of his holdings. The person was really negative. For the first time, he has done really according to his words. He has sold everything that he has been holding. And there have been a lot of investors, big investors, have been telling that this is a bubble. But what is the right way to handle this right now? According to the government, it will be just to make situations proper gradually. If they try to make something really pretty quick, it's going to destroy a lot of things, and there is going to be a lot of panic in the world. So they are just going to make sure that they do it gradually, and that is the right thing to do, according to me, is what I say. So what do you have to say for normal investors? Please don't stop your SIPs. Just keep doing it. If you just think that market is just falling, at the end of the day, what will happen is the market will gain over a span of time, and you will not even realize when the market has really gone up. You can't really catch up with the market when you think that it's really gone down, and I am going to invest at the bottom. That is when you think you are going to be really smart. But please understand that you will not be able to catch up with the pace of the market. So just make sure that you really do the SIPs, and just make sure that you're really downward average. And if the market goes, say, 20 odd percent, that is when you have to try to at least buy it in a bit of bulk. I really can't say how much percent it's going to go down, but something like 80%, I don't think it's really possible in how our actually democratic nation really works. I really don't think that something like 80% fall is really possible in the market as of now. These are my predictions. I really think that in the year end, we are going to see at least around 18,000, but after that, I'll really see a bit of negative side of the market, because no such issues have been really resolved, such as the Russia-Ukraine war crisis. It's still going on, and as the supply chain disruptions really, has there been no problems with it? There have been again problems with it. And say, has there been the Taiwan China crisis end? The answer has been no again. And all of these situations into the screen over here, I think there is a correction of at least, say, 20 odd percent according to me. But make sure that, being a normal retail investor or someone who is just thinking of markets as a secondary income, just make sure that you don't buy stocks at a very high price. This is a time when you have to just be away from really high priced assets, and just stay out of high debt companies, is what I really prefer doing over here. Because if you just buy at high prices, you're going to lose on a lot of confidence that you have in that company and yourself and the markets, if you see it really going down, say, 20 odd percent. So what is the situation right now in the whole world? What have been the Feds doing? The Feds have been increasing the interest rate every quarter. Why are they increasing the interest rate? So that there can't be really easy flow of money into the economy, and it's going to be pretty tough for taking credit or taking debts in the economy. And this is, what is it called? This is called quantitative tightening. There is not going to be a lot of credit flow into the markets, or this is really going to tighten things up for a lot of startups, and I'll see a lot of startup and a lot of, say, high debt companies going down. This is what you can see in the next 2 to 3 years. It's going to be really, really tough for companies that move on high debts, or they just need a lot of capital to move. Anyways, guys, hope you like the video. Just like the video, share the video, and just make sure that you subscribe to my channel. Bye, guys. See you later. We'll catch up soon. Bye bye.